Welcome in this video. Where will ZBCN coin turn upwards? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The chart shows a prolonged downward price action, and as a natural consequence of this price action, a distinct downtrend structure has formed. This type of trend implies that the market has been underselling pressure for a certain period of time, and the overall trend has been downward. However, from a technical analysis perspective, no trend lasts forever. In particular, downtrends that have been so persistent lose strength at certain points and then change direction, which can be a harbinger of a new trend. The chart currently under scrutiny seems to be approaching exactly this breakout threshold, because the fact that the price has approached the falling trend line could be a technical indication that sellers are starting to lose their strength and buyers are preparing to step in. Falling trend lines also act as resistance. Each time the price approaches this line, selling pressure increases, and downward movements can be observed again. However, as this resistance line is repeatedly tested, it loses its strength and eventually breaks. At the moment, the price is once again approaching the falling trend line on the chart. If this time the buying pressure is strong enough and the price breaks this important trend line upwards in volume, it will be considered a strong technical signal. Such breakouts are usually considered the start of a new uptrend. In other words, the end of a downtrend is not only a break of selling pressure, but also the start of a new buying momentum. In technical analysis, trend breakouts are important events that directly affect traders' psychology, because these breakouts change the balance in the market. In the event of a downtrend breakout, traders who have been thinking of selling for a long time now start to change their positions and move to the buy side. Likewise, buyers waiting on the sidelines see this break as an opportunity and enter the market. This causes the price to move up faster and stronger. In addition, after a trend breakout, technical patterns can often be observed, such as the price bouncing back to test the line it broke and then rising again. This is a confirmation signal for traders who are developing a buy strategy. Looking at the structural features of the current downtrend, it is noteworthy that the trend line has been squeezed into a narrower band over time, and this squeeze has now reached its final stages. This indicates that energy is accumulating in the market and that a strong price move may occur in the near future. If this buildup ends with an upside breakout, not only a short-term rally, but also a medium and long-term trend reversal could occur. This is because when downtrends break, the price usually targets the previous high first. This leads to an upward revision of the technical targets. Looking at the recent candle structures and volume data in particular, one gets the impression that buyers are making increasingly bold moves while sellers are slowly retreating. This raises the possibility that a possible contact with the falling trend line may have different results this time. Because this line, which has been tried many times before but could not be broken, is now seen as a turning point for investors. This psychological threshold is very important in technical analysis. If the price breaks through this resistance line, many traders may take positions believing that this is the start of a new uptrend, which could make the uptrend stronger. However, when the downtrend is broken, the price usually shows an accelerated movement in the first place. This is because such breakouts cause the energy that has accumulated in the market to be released in an instant. Especially when the sell orders that have accumulated during the downtrend start to dwindle and buyers become willing to trade at higher prices. This can lead to a chain of buy orders coming into play. This can lead to a rapid rise in volume. But we can't decide on the analysis based on trends alone. Let's look at other metrics. Stay tuned. Remarkably, a structure in accordance with the Elliott wave theory is in the process of forming. When the current technical outlook is analyzed, it is observed that although the first wave has not yet clearly started, the market structure is preparing a very favorable and promising pattern. This situation actually suggests that the uptrend is still in its early stages, meaning that much larger and impressive movements may be experienced in the coming period. According to the Elliott wave theory, the starting point of a market cycle usually signals a quiet but powerful preparatory period that the vast majority of traders are not yet aware of. At the moment, this quietness in price action has the potential to turn into a major price explosion in the coming period. The first impulsive wave, the first wave, is usually a bullish phase that goes unnoticed by the market. Most traders are not yet convinced of the permanence of this move, and although prices are rising, there is an air of skepticism in the market. But for informed traders using technical analysis, this could be an early signal that the bullish cycle has begun. In this context, when the current technical structure is evaluated, it is seen that the extremely positive dynamics that paved the way for the formation of the first wave are gaining strength. In particular, the recovery efforts from the recent low, the increase in volume, and the positive deviations observed in the indicators signal that the first wave may start very soon. At this stage, the second wave is as critical as the first wave. Because this correction wave, which follows the first wave, represents a temporary pullback in the market, while at the same time allowing investors to reposition ahead of the third wave. Therefore, even though the first wave has not yet clearly begun, it is clear that the technical infrastructure is creating favorable conditions for the third wave. In other words, the market is preparing for a strong uptrend and is laying the foundation stones step by step. The third wave, one of the most characteristic features of the Elliott wave theory, is usually the longest and strongest bullish phase. By the time this wave begins, a large part of the market is already in motion, investor interest is growing, and volumes are rising. For this reason, the early stage structure that is currently being formed may hold extremely important opportunities for investors. The fact that the first impulsive wave is not yet complete, that is, the big upswing has not yet begun, suggests that the potential earnings ratios may actually be high. Because the third wave cannot start until the first two waves are completed, and the technical outlook at the moment indicates that these structures are in the preliminary preparation process. At this stage, it is extremely important for investors to psychologically analyze this formation correctly. Many may be hesitant, as there is no clear bullishness in the market yet. However, the main strength of the Elliott theory is its ability to foresee potential movements that have not yet occurred, but are being approached by technical signals. The behavior of price action at the moment clearly shows that preparations for the formation of the first two waves have begun. This tells us that a third wave may begin soon, and that this process has a serious bullish potential. It is important to remember that big movements are always born out of small structures. In the current situation, even though the price's range of motion has narrowed, volatility has fallen and the market seems to be tightening. This is actually a harbinger of a big move. Once the first and second waves are completed, the third wave will carry the price upwards with a rocket effect. Therefore, the current consolidation phase can be interpreted as one of the most obvious signs that this big move is approaching. Notably, the chart shows a falling trend line formed by the RSI indicator. This trend structure provides meaningful insights into the past momentum of the price, but also gives important signals about future price movements. This downtrend on the RSI may indicate that traders have been more cautious in the past and buying pressure has weakened. However, such patterns don't last forever. On the contrary, as we see quite often in technical analysis, the break of such downtrends is often a harbinger of a strong bullish move. The current trend on the RSI shows that while weak momentum may have prevailed for some time, recently the indicator has been approaching this trend line, clearly indicating that it is preparing for a breakout. These structures on the RSI are an important analysis tool in their own right, independent of the trends on the price chart. The upside breakout of such falling trend lines, especially on the RSI, often signals a simultaneous reversal in price. This is because an upward break of the momentum in the RSI indicates that the market is gaining buying power, that selling pressure has subsided, and that a bullish momentum is now starting to emerge. RSI trends should be followed. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.